Good
While I am
afternoon.
So I
I am
getting my
share
screen in
my
place.
Good morning, good afternoon is what it is. Oh, good afternoon. Welcome to our first lunch and learn since COVID, y'all. So excited. We want to thank our partner, Elevator Co-Warehousing, Mrs. Zane, for hosting this for us because it's really good to be able to get back outside and be within and around and see people and hug and tuck and touch. I can't touch it, but anyway, y'all know what I mean. So today we are going to have a lunch and learn on credit as an asset. We have an amazing presenter today. She is fearless, powerful, awesome, wonderful, and it is a pleasure to work with her. Put your hands together for LaTrisha Gandy.
Good afternoon again. Thank you for that amazing introduction. I appreciate that. Hello again. I am LaTrisha Gandy. I am one of the credit loan counselors within Justine PETERSEN. I've been employed with Justine PETERSEN now 4 years. However, I've been a client since 2014. So I've been around for quite some time. Justine PETERSEN gave me aspiration to become the first homeowner in my family. So at Justine PETERSEN, dreams can come true. So today we're going to speak solely about why credit is an asset. There's a PowerPoint presentation. I do want to give disclosures over here on this right-hand side. We do have pamphlets of some of the products that we also offer. So you're more than welcome to gather some of those. We can go over those as well. And one more disclosure, if you would like to have a one-on-one session with me, we have Ms. Yolanda can provide you with a credit authorization form, which give us permission to do a soft inquiry, and I will have a one-on-one with you at the end of the session if we have time. If not, we can always set something up, come to the office, we can go over Zoom, and just have a one-on-one. So again, I'm grateful for this opportunity. Zane, I thank you so much. This is just the first one, so hopefully I'll be back for another one. So we'll get into this presentation here. I like to respect people's time. So here we are, Justine PETERSEN. We do a few things. We build assets and we change lives. My life was changed. Credit is an asset. Why do we refer as credit as an asset and not a liability? Anybody? Yes, sir.
Because it enables you to have access to capital to use it to leverage to acquire things.
Absolutely. 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 The higher your credit score, the lower your interest rates on certain things, home ownership, business loans, personal loans, any of those things. The higher your credit score, the more access that you can obtain. I don't have a hint here. So at Justine PETERSEN, we do three things. Our mission is to connect with low and moderate income families with institutional resources in order to build financial assets and create enduring change. We do that by doing three things: credit building and financial education, home ownership preparation, and retention. We not only want to teach you how to prepare for home ownership, but once you obtain that home, we want to teach you how to keep that home. Small business lending and training. We have a lovely group of small business administration. Ms. Yolanda is one of them. So these are the three things that we do here at Justine PETERSEN, and we have some other things too, but This is the mission. So this slide here is this will be talking about, credit building myths and facts. And so we'll go over a few of these. I ask you guys in the audience to tell me if it's a myth or a fact. I should only view my credit history or report if I perceive there are to be any inaccuracies. Is that true or false? Right. Because why should we review our credit?
See whether it's going up or down, how it's being affected.
How it's been affected. There's some other things on there as well. There's fraud out here. So you want to make sure no one's using your information or obtaining access with your credit. So it's good to check your credit. If I only have collection debt on my credit report, I may not have a score? Is that true or false?
Well,
That's kind of true. If you only have collection debt and there's nothing reporting to the credit bureaus every 30 days, your credit, there's nothing reporting to build your credit. So if there's only collection debt, that means you owe, but you're not creating anything valuable to create your, however, that's not to be broken to be repaired. You can always build credit. Once a collection is paid, the account will be removed from the credit report. Is that true or false? And why is that false?
I don't know why. I feel like it should be removed, but and through my experiences as a, it takes time.
Yeah, it takes time.
Okay. Anybody else? All right. So once a collection is paid, there's this thing called pay for delete. When you're speaking with a collection agency, you say, hey, I want to make that payment on that collection debt. However, when I make this payment on this collection debt, will you guys delete it off my credit report? That's a conversation. Sometimes we pay the collection debt, there's a zero balance, but in conversation, if we're not asking for that simple thing for those to delete it, it will sit on your credit as a zero payment, but it will still sit on your credit report. Paying on-time bills such as rent and utilities build my credit score.
False.
False. Now, there are some landlords or apartment agencies that do report to the credit bureaus, but not all of them do. Utilities definitely don't build your credit score. Creating a payment plan on a collection debt can increase my credit score. True or false? Absolutely, that's false. You're just paying that debt off, building your relationship with whatever creditor that was, but it's not reporting to the credit to create a better credit score. And last but not least, credit building is accessible to everyone committed to the process and their goals. True or false? That is true. It's accessible to everyone. Thank you. All right. Oh, wait. Okay.
My bad.
Yep, it's all right. There we go. Now, this is one of my favorite slides, because this shows the 5 financial factors to create your credit score. And I love to show this and go over this because some of the myths or the hard injuries are pulling down my credit score. We'll get to that. But I want to talk about what makes your credit score. The first is your payment history. That's 35% of your credit score. And that's on time versus delinquent. So if you're paying your car note on time, if you're paying your credit cards on time, any line of credit that's reporting to the credit bureaus and you're paying on time, that's 35% of your credit score. Now, if you miss some of those payments, your credit score will decrease. So you want to make sure you're making those on-time payments. 30% is the amount owed, and most of it is our credit card debt. Installment lines, once you make that term, once you pay your car off, that line goes away. Credit cards are revolving, so they're going to stay on your credit as long as you're paying them on time, keeping your balance low. That revolving debt is 30% of your credit score. 15 is your length of history. So if you're trying to become a homeowner, mortgage lenders are looking at your length of history. They want to see 2 to 3 years on-time payments on your length of history. So credit cards, of course, is that. Your auto loan is that if you have other personal loans, that's 15% of your credit score. So there's this thing with credit cards where people say, I don't even use that credit card. It's in my drawer. I haven't used it. Well, if you don't use it, you lose it. When you lose it, you lose that length of history. So if it's a good line, you've been paying it on time for 5, 6, 10 years, buy a pack of gum, get some gas, but keep that line open because that's 15% of your credit score. 10% is the mix in types of credit, which is a revolving line, which is a credit card, an installment line, which is any type of term loan. You want to have a mix, and that creates a perfect credit score. 10%, the request for new credit. That's those hard inquiries. So if you're shopping for a vehicle, you're in a dealership, they're running your credit 10, 15 different lenders. That's one hit to your credit score. Many people think every time they're running it, that's another hit. That's one hit within a 45 days span. All right, any questions about this chart here? Was it information? Eye-opening? Okay, all right. Okay. Now, what is a credit score? A credit score is a 3-digit number that represents a person's creditworthiness. Sorry, you guys, I got a little dental work going on this side. Based on their history of managing debt. Now, you have your FICO score versus your VantageScore score. There's a difference. If you have Credit Karma and you're looking at Credit Karma, that's your VantageScore score. Credit Karma is only pulling from 2 entities. To gain your actual score, there's 3 entities, which is your FICO score. They're pulling from Equifax, Experian, and TransUnion. VantageScore score is rarely used by major lenders. So the VantageScore score is more of an educational tool to see where your credit is, what's reporting on your credit, if there's any inaccuracies. So if you have Credit Karma, keep that. If you have Experian, keep that. But your actual FICO score is what matters. Around 90 major lenders use that, and those are where it can be found. Now, this is another one of my favorite things to talk about. Because this is about interest rates, right? So the higher your score, the lower your interest rate is going to be. So 71.3% of Americans have a good FICO score or better. Exceptional is 800 and 850. That's 21%. Very good is 21.8%. That's 740 to 799. Poor, 300 to 571. That's 12% of our Americans. 580 to 669, that's 16%. And good is anywhere from 670 to 739, 22% of our Americans. Now, subprime lenders, this is where the VantageScore score comes in here. Subprime is say 780 to 850, that's 31%. Subprime, not prime, 300 to 600, that's 19%. 600 to 660, 18%. And 661 to 780 is 33%. 64% of Americans have a prime VantageScore score or better. So we're all trying to get hit to exception. That's where we want to get. And if you do those 5 factors that I just showed you, you would definitely get to that 800, 850%. Yes. Any questions about that? Okay, awesome. No questions. All right. So what's reported on your credit report other than your lines of credit? You have your account information, any active or inactive trade line. So if you have collections or charge-offs, those are going to report on your credit. You will still see those. Any bankruptcies that you had dismissed or discharged will show on your credit report. Any hard inquiries, soft inquiries, or educational pulls, those do not affect your credit score. Hard inquiries, they show up. And your identity, so you have your name, your social, your address, and sometimes your employment history, which is not always accurate, depending if you move jobs and things of that nature. But these are the things that report on your credit report. Yes, sir. A trade line, anything that's reported to the credit bureau. So that's your credit card, that's collection debt, that's your auto loans, your mortgages. Those are trade lines. Yes, sir.
Or charge off over 100, or they delete it?
That would definitely fall off if you don't, if you take care of them, but they eventually will fall off after 7 years. Mhm. Yes, ma'am. Now, account information and types of trade lines. That was a question you just asked. Examples are car loans, mortgages, student debt, student loans. Now, student loans does not increase your score, but if you miss a payment, they will decrease your score, which that's not a balance. But as long as that trade line is showing on time, it doesn't help increase your score, but it just is on your credit report. Revolving trade lines, credit cards, lines of credit. Now, I always talk about the trade lines of credit. Credit cards are great, revolving lines, but you have those that go to the department stores, and I can save you 10% if you sign up for a charge card. 10% is just some tax. So if you have credit cards and things of that nature, you don't always have to sign up for those charge cards just to save 10%. And you want to always make sure you're watching those APRs as well. APR is the interest rate. Yes, ma'am. Open trade lines, some rental, as I said earlier, report to the credit, some of them, not all of them. But rental trade lines is one of them that can be open on the credit report as well.
Rental trade line, like if you rent furniture or something like that?
No, like a rental company, if you're renting an apartment.
No.
Yeah, some of those show up. So account status. On your credit report, if you're reviewing your credit, which I suggest you should, you will see active accounts, account closed, in bad standing. So if an account is closed with an open balance, that's bad standing. An account closed in good standing means you made those payments on time every month. You paid it off. Usually it's an auto loan or mortgage, student loan debt. That's good standing. The time your credit report. So it's in depth. Once you start to create and build credit, you're building credit. It's in there. Up to 7 years for most derogatory marks. So 10 years for a Chapter 7 bankruptcy. We at Justine PETERSEN, we're not lawyers, so we don't really speak on bankruptcies, but we do allow you to understand that that does stay on your credit for 10 years. And then the account close in good standing stay up to 10 years. But it's good, it's in good standing. Yes, ma'am. Thank you. All right, so this is another of those statute of limitations we just go over again. I like to talk that you see what those are, but again, we're not lawyers, so we don't want to say, Justine PETERSEN told us, no, we didn't say that. So closed accounts in good standing, that's 10 years from the date of closure. So if your credit card's closed today and good standing, it's going to stay on your account for 10 years. Late or missed payment. So say for instance, you miss your card note. 7 years from the date of the first delinquency, that will stay on your credit report. So if you're shopping for a home, and say there's 3 years showing on your credit, but as long as those first 24 months are on time, you're in good condition. Collections are charge off. They're supposed to say charge, not change, but charge off. That's 7 years from the date of the charge off. Bankruptcies, 10 years for a Chapter 7, 7 years for a Chapter 13. Civil judgments depends on our state statutes. Foreclosures are 7 years from the date of foreclosure, and tax liens are no longer shown on a credit report. Inquiries, 2 years. They only do damage for the first 12 months to your credit score. In 2 years, it falls off. Those are hard anchors on your credit. A question? Anybody? Yes, sir.
Hard inquiry, liability.
So if you're shopping for a vehicle, they approve you for a car loan, and you're going to move forward with that car loan, they will pull a hard inquiry. And so hard inquiries sometimes show debt that you probably paid off. Sometimes it can pop up and sometimes it doesn't. But the hard inquiry is going to show all your credit over the course of the years. Again, soft inquiries are for educational pools. So sometimes, very rarely, or the information is different on both reports.
You said, how long is that argument for hard inquiry?
Hard.
Not inquiry, but debt that has been paid off.
That has been paid off? 10 years. No, sir. It should fall off. But that's why it's important to review your credit. Because there are some lines, and I do credit one-on-ones with my clients, and I see debt that should have fallen off. So that's when you want to call these creditors and say, hey, this should have fell off 10 years ago. It's still here, things of that nature. So it's important to check your credit. Yes, sir.
When you say, creditors, you mean like, the person who, the company that you owe the particular balance that you paid off to?
Yes, sir.
And no particular person in the credit bureau per se that you can.
No, you want to talk to that creditor. Yes, sir. And keep your receipts as much as you can. Keep your information as much as you can. I always ask for an email. That way I have that email. Can you email it as well as mail it? That way I have confirmation. I paid this debt off. Here's my confirmation.
If we have this so long,
I know.
our social.
Yes, your social is good, but you know, these creditors like to fight with you. So you want to make sure you can show something.
Hospital bills, the same thing that will pull me down to hospital bills to our own same thing.
Hospital bills is a good question. Now that was I think it implemented last year, where the hospitals cannot put a certain amount of medical debt on your credit, but that's a $500 limit. Ambulance, how much that costs. So, $500, they're still reporting that on your credit. And some of us, like Justine Peterson, we don't look at that medical debt, because we know. But there are hardships that you can ask the hospitals for. They're not going to tell you outright, but you can ask them, hey, you guys have a hardship to wipe this debt off my credit, or try to get it before they put it on your credit report. Yes, ma'am.
They can reactivate
Some of your bad debt.
Right.
So that's a good question. You still want to have confirmation. Mm-hmm.
Yeah, but when I had that, they will.
That will work with you.
For the time period, the 7-year time period.
Mm-hmm.
But if you communicate with them, then, they bring it out this time of play.
Right.
I don't know if that's.
Now, with charge-offs, credit cards, pertaining to credit cards. If you have a credit card that's closed and charged off, and you want to pay that credit card, now you're going to pay that to build a relationship with that lender. It's not going to do anything for your credit because it's already closed. So you're paying on the back end just to build that relationship. And now they may approve you for a new credit card, but those payments you're making on the back end will not increase your score once it's closed out. But as long as it's open, that's what you want to do. And one day hopefully I can come back and give a credit. I have a presentation all about credit card. But I'll just say this real quickly. When we look at our credit card debt, we look at the high number that we owe, and we want to tackle that high number. And we missed that little minimum payment, and now we're delinquent on our credit because we're trying to tackle that high amount. Never do that. Make sure you're making that minimum payment because that's your payment history. Even if that credit card is maxed out, make that minimum payment to stay in good standing. You don't want them to close it out. One late payment can cost your score anywhere from 10 to 15, 20 points, and you don't want to take that risk.
Yeah, I've been trying to study and try to get together on when to make the payment. I tell you, you gotta make the payment like 15. But as I've been looking at stuff, they tell me you don't look at it when you gotta make that. 15th. You're supposed to look at the other payment that's.
The statement date.
There you go.
Yes,
And
ma'am.
so that's why I'm trying to get it to it. So that's how I can try to pay stuff.
Yep.
Balance.
And it helps with your interest. Yes, ma'am. You own it. You own it. Yes, ma'am. That's a good question. That's awesome. Okay. Oh. So there's two types of credit reports, which I've been saying this a lot throughout the presentation. The soft inquiry is reviewed by a lender, educational proof, doesn't impact your score. The hard lenders usually do through a credit application, like a credit card, car loan, mortgage, etc. Typically impacts your score normally for a short period. So once you get approved, you start making that car payment, you start making your mortgage payment, you will get your score, your points back.
How much?
Mhm.
For, is there a certain amount of points that are deducted that depend on the institution that's doing inquiry or what it's for?
It doesn't depend on us, it depends on the credit consumer reporting. So I say between 5 to 10 points on a hard inquiry, but it's also up to the credit consumer how many points they take off. So there's not a number that I can give you because it's not up to us, it's up to the consumer agency to determine
Oh,
those
yeah, well,
points.
that's what.
Yes, ma'am. Yes, sir. All right, so prioritize active debt. Active debt. Anything that's open and actively reported to the credit bureau. You want to develop a budget spending plan. I took a budget class. In that budget class, we were told to print out our last 3 months bank statements, and we had a budget sheet on the side of us. And we went through our last 3 months bank statements to see what we were doing with our money to make a budget plan. It was totally eye-open, and I encourage you guys to do it. I do have some budget sheets that I can email and share that, Zane can share with you guys, but it's truly eye-opening. And even as the lender and the loan officer, I'm like, I need to change some of my behavior and spending. So it is worth it to do. Don't be afraid. Some of us are afraid to even look at our credit reports. Don't be afraid. Because what we don't know and what we don't see, we can't change. Always make that at least that minimum monthly payment on your active trade lines. Like I just said, if it's $25, make that $25. If your credit limit is 500, your balance is 500, but you owe 25 monthly, you can't pay that 500, pay that 25. If you don't have it, I say this, and it's funny, my sister-in-law, and I use her and I love her to death, but I told her, you're gonna borrow anything from me, borrow the 25 so I can pay that credit card. I'm not gonna lend anything if I know your credit card is about to be delinquent. Let's pay that if you're gonna borrow anything, because I want to build, my goal is generational wealth. I want to make sure that I share these tools to build generational wealth. Get delinquent accounts back on track. Again, it's not, oh, I'm sorry.
Can you make minimum payments? Can you make some in advance?
Yes.
There's some folks that will, if it's $80 a month, I'll just give them $800.
Absolutely. I encourage that. Yeah, bring that balance down, keep that interest down off you as well. Absolutely. Get delinquent accounts back on track. Like I said, it's never too broken to be repaired. So if you miss 1 month payment, okay, a hardship, life happens, but get right back on track. Make that next payment and that next payment and that next payment on time. Decrease revolving credit utilization rates. So this here, there's a little equation for your credit card balance. If you have a credit card, your credit limit is 500, you want to times that by 30%. Whatever that 30%, that's where you want to keep your credit cards on a monthly basis, under the 30% utilization. Once it starts to increase, you will see your score decrease. But it's a revolving, it's like a balance beam. It's going to revolve. When you make your payment, you increase. When you spend more, decrease, but it's revolving. Pay off your highest interest. So if you have a credit card with a 29% interest rate, you want to try to tackle that highest interest. And also pay off the smallest balance. If you have $1,000 credit card, but then you have a $500, try to tackle that smallest one and go to that next one. Avoid opening and closing revolving lines, as I said earlier. Those charge accounts that say, I'll say you 10%. Try to avoid opening that, especially if you have credit cards. Try to avoid opening. And again, those credit cards that you got in your that you have in your sock drawer that you haven't used over time, take them out and use them a little bit so you don't lose that length of history.
Because I got tried with over there, with, what's that, with demons over
Uh-huh.
there? Yeah. Didn't it just close or something?
Yeah, but how long have you had it?
Yeah. Your record is so old, because I didn't really want to use it. I just wanted to play with my auntie and they
Uh-huh.
And, I did, and, I think I bought a Gucci or some kind of scarf, just playing with, and threw it in the box with the rest of them, so I wouldn't do it. So you saying I gotta put, they might still, I think they might.
That's probably, if it's been over years, they probably closed
You
that.
said,
How many years?
you said,
I said many years.
it's many years.
Okay.
Yes, ma'am.
It may be, yeah, and they'll close it. So when you review your credit report, you may see things that says closed by grantor. That's the company, like Neiman's. They're gonna close it because you're not using
That's
it.
okay.
No, especially if you have other lines of credit.
Oh,
So, yeah, you're fine. As long as you have other lines of credit that is still reporting to the credit bureau.
okay.
Got it. All right, so building strong credit, Justine Peterson credit building model. Don't dwell on the old bad credit, get the good stuff going. Pay on time, have that 2 to 3 diversified active lines. Now you don't need, that's another, I had a client, she had about 25 credit cards, but she came into the office for a one-on-one. She had about 25 credit cards. We cut up some, those newer lines that she just was at the store shopping and applied for. You don't need 10 and 20 lines of credit cards to have a perfect credit score. You can have one credit card and one installment line, and you have a perfect credit score as long as you're paying them on time. Keep that credit card balance under that 30%. Exceptional is 10%, but this is the rule of thumb, 30%. So again, take whatever that credit limit, times it by 30%, and that's where you want to keep your credit cards on a monthly basis. Now, I want to talk a little bit about how to pay off collection accounts. So you want to know where to store with paying off for inactive debt, just managing your money. I am a product of this. My mother passed while the both of us were going through home ownership. She passed suddenly, and things of that nature. And when she passed, of course, my siblings and I, we got a little money. And I said, I'm going to make sure I purchase a house because this is what my mom and I were doing. We would have been the first two in the family. But when I got that money, I started paying off all collections. Anything that I saw on my credit report, I started paying it. And a good friend of mine, co-worker, his name is Bruce Green, who is our asset credit builder. LaTrisha, what are you doing? I'm paying off this collection debt. He said, some of that stuff you don't need to pay off. So I was wasting some of my money because I was paying off debt that was about to fall off my credit report. I just saw debt and I wanted to pay it. So when we know better, we do better. So a collection accounts, you want to save a lump sum to settle some accounts, especially going through home ownership. Some of the mortgage companies are going to tell you you have to pay this collection before we can approve. You want to consider using your tax refund if possible. Again, ask for medical forgiveness programs to see if they're available, and they are. But if we don't ask, they won't tell us. Negotiate a settlement. So if you have a collection on your credit report and you need to pay that off, offer 25% of that balance and less and work your way up, negotiate. They want 500, I have 100. Because guess what? They've already gotten paid. They've already gotten paid. So they're just trying to get something out of you for the money that they've invested to take your collection. So negotiate. There's nothing wrong with that. I don't have that, but I have this. Can we negotiate? Get it in writing. If they agree to it, let's get this in writing. I'll make that payment, delete it off my account. Be prepared to pay that debt. So when you're ready to have that conversation, ready to have your money ready. Request written verification of settlement before paying. Keep the documentation during the process. Write down the name of the person you spoke to. Request the confirmation, and then maintain a record of all communication. So you definitely want to get their ID number, their name, whoever you spoke to when you're selling your collection debt. Now, some of the collection debt, like I said, you don't have to take care of. The mortgage companies will tell you which ones. There was a collection on my account for Verizon that I did not agree with. Verizon is one of those that will not delete off your credit. They want your money, but I was still able to purchase my home. So that's just a little tidbit of information when you're dealing with those cell phone companies. So today is a great day to start building strong credit. Y'all think about that. Okay, all right. Hey, that's it. I'll take care of it. Any questions? Thank you, thank you. Yes, ma'am.
So, this reading last something that there is, it's something that will close up and we want to build a relationship with something.
Mhm.
Now, what if the items are gone to the right?
A third party. You deal with the third party, because now it's at the third party, but that's where you negotiate, because they've already been paid. So that's where you negotiate the money you want to pay them at that point. So, yeah, negotiate with the third party.
That's in the regular.